Okay, so here's what I think matters. First of all, I think that Fed Chairman Powell conducted himself very well. He's been widely criticized again. He can't get people really just have the long knives out for him. This is an inventory glut recession. There's gluts on almost every. There'll be a glut in housing. There's clearly a glut in things that are in retail. We saw that from Best Buy again, confirming Walmart. But we can't find more workers. So at the same time, we need companies to. I don't mean to sound heartless here, to lay off people, and that has not happened. The first time I've seen anything like that was in Stanley Black & Decker, which was a total disaster quarter. Mm-hmm. So we don't have enough labor, but we fortunately have inventory gluts across the board, which is going to make it so it's very hard to raise price. And therefore, I think Jay Powell can take the summer off, come back September, raise smaller. Jeffrey Gundlach yesterday saying,
no longer behind the curve.
I thought that was seminal because Jeffrey's been very good.
Now,
on the Fed,
those who wanted 100 basis points, those who wanted a hike intra-meeting, are they now looking back and thinking that would have been a mistake?
Well, they have to. They were doing suboptimal thinking, and they've been ill-advised. And I think it's time that it's okay to be able to say it should be more data dependent. Again, I don't want. I mean, the one thing I don't want to do is say things that would elect the Democrats or the Republicans in the House. I think there's a lot of subcurrents. The people who like the Republicans are saying that it's all bad. The people who like the Democrats are saying it's good. And you got to get away from that because it doesn't make our viewers money. I don't want to be Jim Cramer in September of 1988 telling Karen Cramer, don't you understand, it's a recession, it's stagflation, and only for her to pick up the phone and buy everything because I was not a stock person. I became an economist. And I don't want to become an economist. What I want to do is say what will happen with stocks. And we were up huge yesterday. We should be down today. The last two times that the Fed raised, we were down. And what this economy, this stock market is saying is, you know what? It's not as bad as we thought. And I think one of the reasons it's not as bad as we thought is because we wanted the Fed to be able to say, listen, we're in charge again. You know, you think we've lost our touch? We're in charge. And I think that kind of stability in a democracy is good news.
Right. So you think it's meaningful that we're not giving back a lot of the best day in 2 years for the Nas?
Well, I mean, the numbers last night were all subpar.
Oh, we're going to go through all the weaker guidance. You mentioned Stanley, Coursera, Best Buy, Qualcomm.
You know, Best Buy is what I'm talking about when I talk about an inventory glut. I mean, they have too much. Stanley, Black & Decker, that's an inventory glut. You can go aisle by aisle in Home Depot. They may have an inventory glut. Sherwin-Williams would indicate they might have inventory glut. I'm looking at what's bought by consumers. I mean, in apparel, there's a terrible inventory glut. TVs, inventory glut. Everybody made too much of everything. Shopify hired too many people. Amazon, Jeff, you're going to see a big slim down by chassis. Facebook, Metaverse hired too many people. Alphabet slowing hiring. This makes a lot of sense.
Do you think it's because employment lags? I mean, continuing claims this morning were down.
Well, I think that I think that what you'll get is initially they're still hiring slowly, and then they will be just laying off. I mean, when I look at Meta, Facebook, we don't care. Obviously, we want revenue growth, and we don't care what it costs. We don't want down revenue growth and try to make the number through savings. But, that said, they have to right the ship there. And that's where we're going to see the big layoffs. Yep. Now, I think that Mark Zuckerberg actually is building, he's got a big product transition to Reels, and Reels doesn't make as much money. I don't want to be too granular yet. But I do point out that when you get the end demand for a lot of things that have been really great not be that great, it's just you're just not used to seeing it in Silicon Valley.
Yeah,
I mean, there's just Silicon Valley's with the headquarters of the recession, not the banks.
Yeah.
I mean, Brian Moynihan. I mean, did he come on the show to be able to say that the consumer's strapped and consumers in debt? No, consumers very ready for recession. That's not supposed to happen. We're all very confused because the individual is liquid. Someone the other day was saying the debt rates are high. I mean, Brian Moynihan knows what the ratio is. And so I come back and say, look, there are a lot of stocks that have to go lower because they had bet that the economy was going to accelerate. And they have too much of everything, too many people, too many products. They double ordered in some cases.
Right.
And we have to go through that. So if you owned Best Buy, you're going to, today's your day to be whacked. My Chapel Trust owned Walmart. That was stupid. I was banking on Walmart to have the artificial intelligence to not be what they did. Now, see, I didn't say they're stupid. I said I'm stupid for listening to them.
Yeah.